I want to talk about is returns. One of the things we made a decision as a team is that we are not here to chase returns. We are not here to compete with anybody on returns. For us, we want to ensure that we are consistent in our returns, but also conservative in what we're investing in. Because we are here for the long haul. We're here for a long time. And we don't want to give you returns now that are extremely high, then we find we're not able to sustain those returns and so on and so forth. And so even when we've hired traders, we're not saying when you make high returns, because we don't want them to take too much risk. So one of our biggest priorities is risk management. Because we are very clear, the last thing we want to do is lose people's money. So that's number one. Now, from there, we want to make money. And it's been amazing. As I said, 2024, we did 29, which was a huge surprise. But also when you're working with little money, it's easier to make returns. So, January, February, March, April, things were good. On average, we're like on 21% or thereabouts. March, Trump comes and makes this announcement. President Trump makes this announcement around tariffs. And I remember that those last 3 days of March, having a conversation with Ian and the traders and just hearing the impact it had on us. The beauty about it is that we're diversified. So yes, it did affect a few things. We lost money in the Eurobond. Our yields went up and it affected us. I'm sure Hillary will tell you that story. But yeah, it affected us. And so it was like, okay, what does this mean, blah, blah, blah. But we were fine. We didn't make a loss in the portfolio. We did make a loss in that particular asset class, sovereign bonds, because of what happened with the Eurobond. But we didn't make a loss on the overall portfolio. In fact, we've never, since we began this fund, made a loss in any 1 month on the portfolio.
Okay. One more thing I would like to say is to highlight on the challenges of, let me say, from around June, July to actually the end of the year. One of the things is Trump. Trump comes with volatility. And we say, is volatility good for the markets? Yes, if you know what to do with the volatility. But the volatility was too crazy. Outside there, and we've looked at various people, they say gold was an obvious buy. We've seen it rise to 43.76 from levels of 3,400 basically. So from externally looking, it's just buy, hold, ignore, look at it later. And that's how it looks. But remember, we have to report, we have to measure our risk, we have to look at in case it turns. And if you can look at the chart of gold, it used to rise slowly, then 1 or 2 days, it gets a very big drop. Then again, continues. So as much as from hindsight, and we always say that all traders are good looking back, not looking forward. It looked like a good buy, a good trade, and everything else. But the risks that were involved during these terms and the volatility, we had to make very calculated decisions. That is one. Two, you saw what happened in S&P 500, going up, going down. There is a time we had a whole week of red markets. We've suffered from the government shutdown. There was a vote. We are still waiting for it. So the US markets have been, let me say, very volatile. And that's why you'll see us moving more into options than actual holding stocks. We'd rather take the volatility with options than direct trades, because it's either you take the loss immediately or you stay out of the market. That is what has happened. The other thing, it has also led us to start looking into other global markets from different sovereign offerings that we have within Africa and outside Africa, and also looking at the Asian market going forward on the opportunities that are there. So by next year, I'm sure you'll see more exposure into the global markets. But I always say, as much as we say we give you global exposure, Kenya is part of the globe. Mm-hmm. And we say we always understand Kenya more than any other market. So if there are opportunities in Kenya, we'll first trade Kenya, and we look for further opportunities or more leverage opportunities outside Kenya. But if Kenya is working for us, don't worry when you see us concentrated on Kenya. However, in the global space, we'll always ensure that we are diversified.
And then something else happened. The Kenya government in July offered this bond. I think it was the Talanta bond at a much higher interest rate than our. Anyway, let me just put it this way without being too technical. The price they offered it at caused us to have to revalue, because you have to mark our book to market at a lower. Basically, that pricing caused us to make a loss in our bond book because of the fact that now the yield had gone high, and when interest rates go high for bonds, the value of the bonds comes down. And at that time, I think our holding was like 56% of our book was in bonds. And we ended up making a return from an annualized perspective of about 8% in July. The reaction of clients, I was shocked. I'm like, hang on, did we make a loss? I've not lost your money.
So moving into Q2, the month of April, one that was, chaotic. Done, we reported a positive return. The month of May, done, we reported a positive return. We came to June, still the same. In July, still the same. We reported a positive return. Actually, I'm happy to say we've never reported a negative return since we started. We've always been reporting a positive return. So in the month of July, still, we had our investments in place, and we had diversified our portfolio. Very well, very nice. Strategy-wise, we are okay. We've analyzed the market. We've added to our asset class scope, and our book at that time was heavy on local government bonds. So the local government bonds asset was holding over 50% of our portfolio. And that is intentional actually, because it's known that these are safer assets to have. And if we have a huge allocation to safer assets, and then we have this other allocation into other assets that are a bit medium or high risk, then we tend to be at a good place in terms of risk management. So actually, in the month of July, the return was a bit low compared to the others. And as dealers, the pressure will still be there. If you report a low return, you face the pressure, even from your own team, even internally, So it happened that in the asset class of local government bonds, the yields actually went higher just when the month was almost coming to a close. And due to that, we actually revalued our papers with that market yield. So on that revaluation, we suffered a paper loss, right? It was not an actual or a realized. But one of our core values is we have to say it as it is. Transparency is one of our core values. We have to report, we have to revalue where the yield is, regardless of when that happens. Yes, it was towards the end of the month, so we didn't have much time maybe to re-strategize and get other assets to deliver a return to cover up, so it was a paper loss that wasn't realized, but due to revaluation, we reported that return the way it was. And that is why it informed, we had a low, not a negative, not a zero return, but a return that was not high, but it was a return, yeah, in July. And come in August, the yields went lower. So when the yields went lower, we recovered the loss. You know now in bonds, when it's inverse. When the yields go up, you make a loss, right, on revaluation. When the yields drop, you make a gain, because means you are holding the bonds at a premium price, right? So that is what happened. And there was these concerns even from clients outside asking what happened, why the low return and everything. And I remember even we organized a webinar. We talked about the assets and the return, and we even explained what happened, just to make them aware.
So it was interesting. We had planned a webinar anyway, to just tell guys about, we have this new back office system and da da da. So because we had already scheduled it, actually we scheduled it before the results were out, but we ended up spending a lot of time talking about returns. What clients thought was that we were talking about, we held the webinar specifically for the returns. But you know what our chairman of the investment committee, who happens to, he lives in the US and has been a trader in New York for a long time. He was just like, well done, well done. I'm like, well done for what? No, it's important for people to see that markets go up and down. And so it's good that things didn't work out. In fact, you should make a loss so that people realize. I'm like, no, he's like, no, that's not what I mean. But it's important for people to recognize markets are not one way up. They move up and down, and it's important. And that's why we say this particular investment, even stocks, are not for every investor and not for every circumstance. So you can't save all your money in the world and put it in stocks, for example, because they do this. Anyway, so yeah, so July happened, and we were actually happy we didn't make an overall loss, but the reaction was very interesting to sort of see. And I began to recognize that people are very sensitive around returns, which made me comfortable and confident in our decision not to chase returns, but to be consistent. So anyway, we've since sort of come back up again, and markets do what they do, and the team has done extremely well. I'm really proud of all our traders and how they've been able to manage things.
I'm very pleased and happy to say that now we have officially started the USD fund. So it's actually Oak Multi-Asset USD Fund. It's a dollar-denominated, United States dollar-denominated fund with a minimum investment of $5,000. The lock-in period is 6 months, just like the KES amount, but we are targeting 10% as the annualized return after fees. The fees are 3% annualized, so they are actually prorated within the year. So it's actually 3% over 365 days. That's what we charge. I'm sure on the management fees we have discussed in various videos on that. And right now, as much as we just started, I'll say we are at $1.2 million assets under management and still growing. So for those who feel that they want maybe to put their money in a different currency, and they feel maybe what they are getting in various places, maybe in terms of deposits, they're getting 2%, 3%, 3.5%, and they're looking for better returns, they're welcome to be with us. There's a link on to get onboarded on the portal, or you can download our app, which will be shown on the screen on both Play Store and also App Store. And someone will reach out immediately you sign in, so that they can help you with the journey to sign up on the Oak USD fund.
All along, by the way, our license has been for 4 funds, but we chose to focus only on one, because we didn't want to bite more than we can chew. There's a lot that goes into managing just one fund. And we wanted to do it with excellence. We wanted to do it in a way that enables us to be experts in what we're doing. And you see, you can't just have one person in your organization that understands something. Every single person at every level, whether it's finance, operations, customer service, sales, everybody needs to understand the product. And so we delayed the others to perfect this one, get understanding, get clients, get to a certain level of operational excellence, and then we can begin the others. So we began the USD fund and opened it up. We haven't yet marketed it, but we will market it eventually. That one's done really well, actually. So now we have it open. We have clients who are depositing US dollars in it, and so far we've done about 12% return on our assets under management. So really excited about that one too, because it then enables those who don't want to convert their money. So let's say, for example, you work in Kenya, you earn in dollars, or you work elsewhere. You work in the US, and you want to keep your money in dollars and you're diasporan. It gives you an option to be able to keep your money in USD without having to convert it, and you can then convert at any point in time. But yeah, the US dollar fund is something we're really excited about, and we have a good goal for it for next year.
So when we started, we diversified the little capital, the little AUM that was there, and we got a return for the month of August that we reported. We got a return also for the month of September that we reported. Actually, September was our highest performing month. I think the fund did over 20% annualized return for the month of September. And our target is 10%, In the month of October, the USD fund did 13.19% fund average. That is annualized, and we are targeting 10% per annum. And actually that 13%, we were like, okay, we can do more, but for the sake of the fund and what we want for the long term, we need actually to go slow. We can do more, actually. We could have done more. We could have reported even a crazy return for the USD fund. But as dealers, the team, we are looking at the bigger picture. How will this fund be maybe 5 years from now? What is the historical data for this fund? So we are looking at that. Even as we are starting, we want everything to be aligned. Yes, because you remember the Kenya Shilling Fund when we reported an annualized of 177% in the month of March 2024. There were too many questions. What happened in this month? What was going on? Why can't you do the same every single month? So for the USD fund, we want it ironed out so that we have that consistent progress. And I'm happy to say right now we are over $1.1 million in AUM. Just 3 months or less. Yeah, we are over 1.1 million USD, and we are still moving.
Yeah, so with all of that, early November, we hit 10 billion shillings, and we're like, yes! So very exciting, very exciting. But guys, this is just the beginning, and I'll tell you a little bit more about where we're going next. I hope you're enjoying listening to this journey, and as you listen, in case you're like, I want to join Oak, the details on the screen. We have the Kenya Shilling Fund that's available for you. We also have the USD Fund that is open and available to you. And so we can share a fact sheet with you, information on how you can set up. You can set up a call to find out more information, and the details are on the screen. Karibu sana.